Picture this. Your money's like folders on your table, each with a specific job: spending, saving, or growing your cash. I'm going to walk you through the main types of bank accounts, tell you when you'd use each one, and share a quick example to make it click. Then we'll figure out how to pick the right ones for you. Like I'm sitting right here helping you sort it out. Ready? Let's jump in. Checking account. Your everyday account for spending. You can use a debit card, write checks, or pay bills online. It's easy to access, but some accounts might charge a fee, like $12 a month, unless you keep a minimum balance or set up direct deposit. Others are free. Pick this for daily expenses like groceries, rent, or gas. It's for money you need to use often. My buddy Jamal just got a job as a cashier and needed a place for his paychecks. He opens a checking account at a local bank and sets up direct deposit to skip a monthly fee. Now he's swiping his debit card for lunch or paying his phone bill online. It's so simple, and he likes popping into the bank if he has questions. All right, that's checking accounts. Now, let's talk about saving your money for later. Savings account. This is for money you want to save and not touch right away. It earns a tiny bit of interest, usually low, like 0.01% to 0.04% a year. You're limited to about 6 withdrawals a month, so it's not for constant use. Use this for short-term goals, like a vacation or an emergency fund for unexpected stuff, like car repairs. It keeps your savings separate from spending cash. My friend Maria really wanted a new laptop, like $1,000 worth. She opens a savings account and puts $50 from each paycheck into it. The interest is low, just a few cents a year, but it's safe and she tracks it on her bank's app. After a year, she's got her $1,000 and buys that laptop without stress. Cool, that's for basic saving. But what if you want to earn a bit more? Let's check out the next one. Money market account. This is like a mix of a savings and checking account. It pays better interest, like 2 to 4% a year in 2025, and lets you write a few checks or take out money sometimes. You might need a bigger balance to avoid fees. Go for this if you want more interest than a savings account but still need to grab your money now and then, like for a big purchase. My pal Lisa runs a small catering business and has $5,000 to save for new kitchen gear. She opens a money market account that pays 3% interest and doesn't charge fees. She can write a check if she needs something big, like an oven. A few months later, she buys the oven with a check and still earns interest on what's left. Nice, right? But what if you can lock your money away for a while? That's where the next one comes in. Certificate of Deposit, CD. This is when you put your money in an account and promise not to touch it for a set time, like 6 months or 5 years. You get higher interest, 2 to 5% in 2025. But if you take it out early, you lose some of that interest. Use this when you know you won't need the money for a bit, like saving for a car or a house down payment a few years out. It's a safe way to grow your cash. My cousin Tom got a $10,000 gift and wanted to save it for a car in 2 years. He opens a 2-year CD that pays 4% interest. He can't touch it without a penalty, so he leaves it alone. 2 years later, he gets his $10,000 back plus about $800 in interest, which helps him get a nicer car. That's a great way to save if you're patient. But here's another option if you want high interest without locking it up. High Yield Savings Account. This is a savings account that pays way better interest, like 3.6 to 5.5% in 2025, often from online banks. You're limited to about 6 withdrawals a month, just like a regular savings account. Choose this for the same stuff as a savings account, emergency funds or short-term goals. But when you want to earn more interest, it's awesome if you're cool with banking online. My friend Sarah wanted to save for emergencies, like if her fridge breaks. She opens a high-yield savings account online that pays 3.6% interest with no fees. She puts $200 a month in it. After a year, she's got $2,400 plus about $80 in interest. When her car needs a $500 repair, she pays it from the account and feels so relieved. That's a sweet deal for saving. Now, let's look at a checking account with a little bonus. Interest-bearing checking account. This is a checking account that pays a tiny bit of interest, 0.1 to 1% in 2025. It's like a regular checking account, but you might need to keep more money in it to get the interest or avoid fees. Use this if you keep extra cash in your checking account and want a small reward, but still need to spend from it every day. My buddy Mike always has about $3,000 in his checking account for bills. He switches to an interest-bearing checking account that pays 0.1% interest and has no fees. He uses his debit card for groceries and bills and earns a few bucks a month in interest. It's not a lot, but he loves getting a little extra for free. That's handy for everyday use. Now, what if you're sharing money with someone? Let's talk about that next. Joint account. This is a checking or savings account you share with someone else, like your partner or a family member. Everyone can use the money. Pick this for shared expenses, like rent or groceries or saving for something together, like a vacation. It's great for couples or families. My friends Anna and Carlos are married and want to pay rent and save for a vacation. They open a joint checking account and each put $300 a month into it. They use it for rent and groceries and check the balance on the bank's app. They keep $1,500 in there to avoid a monthly fee. It keeps their shared money nice and organized. That's perfect for teamwork. But what if you've got a business? Here's one for that. Business bank account. An account for people who own a business or have a side hustle. It's like a checking or savings account, but with extras, like tools for payroll or accepting payments. Some have no fees, while others need a balance to avoid them. Use this to keep your business money separate from personal money. It makes taxes easier and looks professional. My friend Raj has a dog walking business and opens a business checking account with no transaction fees. His clients pay him through it, and he uses it for business stuff like buying leashes. At tax time, his accountant loves that all his business money is in one place, separate from his personal cash. That's great for business owners. Now, let's talk about an account for beginners. Student or teen account. A checking or savings account for people new to banking, often with no fees and simple rules. Some even pay a little interest, like 0.1%. Choose this if you're just starting out with banking or want a simple, low-cost account. It's perfect for beginners. My friend Emma, who's 15, just got her first job and feels nervous about banking. She opens a student checking account that's free for people under 25 and has no overdraft fees. She uses the debit card for coffee and bus fare, and the bank's app helps her track her spending. She's feeling way more confident now. That's awesome for getting started. Next up, an account for saving for someone else. Custodial account. A savings or checking account an adult manages for someone younger, like a kid, until they're 18 or 21. Then, the money is theirs. It can be used for any expenses, such as college costs, a car, or other needs. Use this to save for a young person's future expenses, like college, a car, or anything else they might need. It's a way to set up money they'll control later for whatever comes up. My friend Linda wants to save for her nephew's future expenses, like buying a car or paying for school supplies. She opens a custodial savings account and puts $2,000 in it. She adds $100 every year on his birthday and another $100 every Christmas. By the time he's 18, the account has $5,600 with some interest. He uses it to buy a used car, which helps him get to his new job. That's a great way to help someone out. Now, let's look at an account for medical stuff. Health Savings Account, HSA. An account for medical bills if you have a high-deductible health plan. You can save tax-free up to $4,300 for one person or $8,550 for a family in 2025, and use it for things like doctor visits or medicine. Pick this for healthcare costs or to save for future medical needs. It's awesome because it saves you on taxes. My buddy Greg has a high deductible health plan and opens an HSA. He puts $200 a month in it, which lowers his taxes a bit. When he needs $500 for dental work, he pays with the HSA debit card. He's so glad he's got money set aside just for health stuff. That's super useful for medical bills. Lastly, let's talk about saving for way in the future. IRA, savings, or CD. A bank account for retirement offered as a savings account or CD. Interest rates can be low, 0.05%, or higher, up to 4%. It's tax-advantaged, traditional or Roth, and super safe. Use this if you want a safe way to save for retirement without investing in stocks. It's for people who like guaranteed returns. My friend Diane, who's 45, wants to save for retirement but doesn't like risky investments. She opens an IRA CD with a 3% interest rate for 5 years. She puts $6,000 in it, which she can deduct from her taxes if it's a traditional IRA. After 5 years, she has about $6,900, safe and ready for her future. Important note on rules and rates. Before we get to picking the right accounts, let's talk about something key. The fees, interest rates, and limits I've mentioned, like $12 monthly fees, 4% interest, or 6 withdrawals a month, are just examples to give you a sense of how these accounts work. Every bank has its own rules and rates, and they can be totally different from one bank to another. Plus, banks often change these things over time to keep up with new laws or economic shifts. So, to get the exact details, like the real fees, interest rates, or withdrawal limits, check your bank's website directly. That way, you'll know exactly what you're signing up for. Now, let's move on to choosing the best accounts for you. How to choose. All right, now let's figure out which accounts are right for you, helping you make sense of it all. It's all about matching the account to what you need your money to do. And I've got some practical tips plus a bit of wisdom to keep you on track. Daily spending. You'll want a checking account. Look for one with no fees if you can, so you're not paying extra to use your money for bills or groceries. It's your go-to for everyday stuff. Now, let's say you're thinking about saving up for something soon, like a trip or just in case your car breaks down. A savings account or high-yield savings account is perfect. The high-yield ones, especially online, give you more interest, so your money grows faster. What if you're planning way ahead, like for a car or even retirement? That's where a CD or IRA comes in. CDs lock your money up but give you guaranteed returns. Great for something like a down payment in a few years. IRAs are awesome for retirement, keeping your money safe and tax-friendly. Got a special goal in mind? If you're dealing with medical bills and have a high deductible health plan, an HSA is a smart move. It saves you on taxes and covers doctor visits. Or if you're saving for a kid's future, a custodial account lets you set money aside for them to use later for anything they need, like a car or school supplies. And if you're sharing money or running a business, there's something for that too. A joint account is great for couples splitting rent or saving for a vacation. If you've got a side hustle, a business account keeps your work money separate, making taxes way easier. Now, here's a little wisdom to guide you as you're making these choices, because picking the right accounts is a big deal. Proverbs 21:5 says, "Good planning and hard work lead to prosperity, but hasty shortcuts lead to poverty." This is like a nudge to be thoughtful with your money decisions. Here's what it means for you right now. Take a moment to research your options. Compare fees and interest rates to find accounts that match your goals, so you're not wasting money or missing out. Stay clear of quick, risky choices. Some accounts or products might promise big returns but come with high fees or risks. Slow and steady keeps you on the right path. Make it a habit to check in regularly. Look at your accounts every few months to make sure they're still doing what you need, like a good manager keeping everything in order. So, here's what I'd do if I were you. Think about what you need most right now. Maybe a checking account for bills and a high-yield savings for emergencies to start. Or if you're thinking about your kids' future, a custodial account could be perfect for any expenses they might have. Visit your bank's website or a comparison site like bankrate.com to get the latest info for 2025. Pick one or two accounts that feel right, and you can always add more later. If you found this helpful, don't forget to subscribe for more videos. We'll keep diving into money tips and tricks to help you stay on top of your finances. What's the first thing you're thinking about for your money?